Welcome back. You're still tuned into Smart Money on CNBC-TV18. We are in conversation with Amisha Vora of Prabhudas Lilladher Group, which she recently acquired. So that's the big news headline. But we're also talking to her about her investment style, and she is our outstanding woman in finance for this series. Amisha, before the break, you were telling us about your investment style, how you like to identify companies that are on a growth path, but also at an inflection point. What else? Where do you see the alpha generation? Because you do believe that this is a decade that belongs to India, belongs to investors. How do I generate alpha for my portfolio?
So which are the sectors which will be leading in that alpha generation? So I think that I still believe, particularly defense, there is a sea change in terms of national policy which has happened. But beyond that, they've got a time of almost 4 to 5 years to implement it. So what has really happened is they have a negative list of items which they cannot import. They also have given competitive bidding and level playing field to private and public. And they want to strategically develop the entire vendor industry behind that. So there are a few listed plays, I agree. But I feel that from this field, a lot of current plays, public or PSU or private, which will continuously get very good orders. Right now, our industry is just about 90,000 crores domestically. We feel in 5 years, it will become 5 lakh crore. That's the size of growth that we are seeing in defense, yes.
Wow. But these are stocks that have rallied a whole lot. So
correct.
You think
the
that
stocks have really rallied. But if you see, some of them are with almost no debt kind of a balance sheet, are still around 15 to 20 times multiples. They're not so high. But as the industry keeps growing, the visibility of growth, here the payment system is also very structured. It's not that in infra we went, as a country, as companies, we went into trouble because the payment structures were not very clear. And over and above that, a lot of things got involved in terms of right of way and so on. But here, once the order is given, I think the visibility of implementation is also high. And there are certain private sector players also, for example, Bharat Forge, who are having their own businesses, but they've done so much deep work over almost a decade that they are ready. And now I guess that the order book will start. But this is one of the aspects which is very capital goods industry. I wouldn't say that's the CAGR or compounding kind of a story, but it is a good sector. Compounding stories, we feel that QSR segment, quick service restaurants, we have
like the Jubilant Foods of the world.
Yes. And now there are many places available like
Devyani.
Westlife. And as the penetration keeps growing up, our habits are changing. And I think this segment will continuously do very, very well.
Since you're talking about consumption segments, it's been such a big downfall of these platform companies, right? Whether it's a Nykaa, Paytm, something like a delivery. What's gone wrong here? And from an investor standpoint, what does one do?
See, I think one needs to understand two things. As what I always say, that the stock prices have two aspects. One is fundamental, second is valuation. Some of these businesses were, when they got listed, also were similar. What happened is US interest rates were almost near to 0 or 0.5%. So when you discount the future cash flow, we used to discount for next 10 years, 15 years at 0.5%. Now we discount it at 4%. So the whole value comes down substantially. That is part one. Part two is that we assumed, markets, investors were made to assume that the easy liquidity scenario is here to last, but it never lasts. So which means that you keep grabbing market share, we will keep funding you. Now that funding is out of the way, so that they have to stop their market share chase game a bit and start focusing on profitability to sustain. So when both these factors have come to play, I think the valuations are reflecting these. The underlying businesses, were they fraud? No. Were they putting in genuine efforts? Yes. Will they sometimes succeed? Most likely, yes. Unless the competitive pressures somewhere change over a period of next 5 years, but some of them have made dominant positions, but they need that breathing time to now
To
being
return to
viewed.
profitability.
Yes.
Yeah, because there has been a lot of cash burn for these companies.
Absolutely. And that was what investors wanted them to do. Grab market share, we are here to support you. Now they don't have liquidity, those investors, so these people are changing their strategies.
Okay. But as an investor, would you touch any of these stocks?
Of course, while they were listing, we kept on saying that we will get better opportunities. I would still say that this is not the bottom. Maybe price-wise, if it is bottom, it might take a little more time sideways before they start showing those stronger signs of surviving this particular onslaught which is globally happening of a complete, you can say, stop on fresh capital. So how are they really adjusting their business models and strategies? One really needs to watch. But there are a few very good plays. For example, Policy Bazaar. I would somewhere think that they are close to making it first in the race. In terms of their business model, they are very well entrenched and they are a necessity. So also, no doubt, Zomato, they are necessity. But I would think that in the race, probably Policy Bazaar will
be the one to stand tall amongst the others.
faster.
Okay, that's on Policy Bazaar. Any other themes before we wind up this stock market discussion? Any other themes that you like? You spoke about defense, you spoke about QSR. Any themes that could sort of balloon over the next 1 to 2 years?
So I think that, see, some of the stocks have really done well. For example, hotel industry also has done really well, be it Indian Hotel, Lemon Tree. But we have entered a phase where next 3 to 5 years, the supply of hotel rooms is very limited. The habit of experience, spending on experience has improved substantially. Also, the business will continue to flock to India from all the corners of the world. So here you're seeing limited supplies. So I see rising trend in room occupancy, rising trend in room revenue, and rising trend in their non-room revenues also. So with these combinations, and most of them have adopted very capital light model of giving their brands and management, I think this sector will continuously do well, even for next 2 to 3 years.
Okay, yes, the way we are all consuming, the way we are paying for experiences, right?
Yeah.
I mean, it's no surprise that these sectors will do well. Okay, tell us a little bit about your own personal experiences. Since you have been in the market for over 35 years now, who has your biggest mentor been? What is your, the mistake perhaps you may want others to avoid? Let's start with your mentor. Who's your mentor in the market?
So I would say that I was very lucky. As you know, I started my career in research and then moved on for institutional sales. Now, of course, I manage the full business. So I had opportunity to meet the best of the minds and fund managers. Somebody who comes at the top of my mind is Morgan Stanley's fund manager, Mr. Vinod Sethi. Earlier days, he used to manage the entire India investments of Morgan Stanley. And the early, I would say, investor into HDFC Bank, and in all those discussions, from an outsider perspective, how they view the Indian markets, the larger opportunity, how to see the larger opportunity that this housing finance is so nascent as compared to X, Y, Z countries, that there is nothing but growth here. And a sustainable growth, policies are so good. So that outside in perspective and a broader view, I think the first which I used to learn is from Mr. Vinod Sethi. But also as I moved on and I used to meet a lot of corporates, many have impressed me a lot, but in the earlier days, someone who has really impressed me is Mr. Dadi Sheth from Levers.
Okay.
I believe that many good CEOs I've seen, but somebody who has a fantastic blend of strategy, micro and numbers was him. And that was seen the way he really took Levers those days to places and changed the whole presence of Levers in India with all the mergers and all that. So like that, I think both from corporate side and also from the funds management side, there are many who have really impressed me, and I keep learning. Every meeting for the management I go, of course I'm learning about their business and what will happen to their stocks, but I also get a lot of management lessons as to what's really working for making this organization so solid. And of course, my all-time favorite continues to remain Mr. Deepak Parekh, because I think Deepak Parekh has been one who has created his brand equity much beyond even HDFC's brand equity, which is one of the most respected brand, I would say, globally, but his brand equity stays taller than that. So that is something which one is always in awe of.
Wow, you were blessed to be in the presence of such greats, right? Such legends.
Exactly.
All right, if you had to tell us about one mistake that you made in your career, either in your investments or in your corporate career, that you would want to avoid, you would have loved to avoid.
Sure. I think that 2003 to 2008 was a phase when India's infrastructure regime was changing, and we were going into PPP and so on and so forth. I don't think only me, but all of us as corporates, banks, country, policymakers and investors, we made a mistake in terms of really understanding the on-ground challenges which infrastructure implementation in India can have, and which can just derail the whole cycle, resulting into complete loss of investments. And I think in that what also contributed is that these businesses that we realized early on, after a 2 years growth story, we realized that these businesses are finally not generating cash. Their cash is still getting stuck. So we got off that. But I think even to get carried away with a growth which does not generate cash is a mistake which we did, and I would always refrain from that going forward.
Okay, so never buy companies which are growing but not generating cash. All right, Amisha, we have run out of time but not out of questions. It was really a pleasure speaking to you, and all the best. Hope you hit newer and newer pivots of success and path the way for all the ladies who are watching you. I mean, all the younger generation who's watching you and wants to perhaps follow your footsteps. Thanks a lot for joining in.
Thank you so much.
Okay, with that, it's curtains down on another episode of Smart Money. Keep writing to us. We love getting feedback from you. Till then, stay safe.